Hi folks, this is Sean Hyman with you again, and I just want to talk to you about my chart of the day, which is when what seems to be obvious may not always be obvious. And what I mean by that is you've had a low here, market corrects up, comes back to basically around the same area, spikes up, shoots up, the market doesn't let it stay there any length of time, not even one candle can close there, ratchets up again, comes back again, launches off of it again, etc., carries on and comes back again. Now, people have seen this hit here 1, 2, 3 major times. Here comes number 4. It's got to do the same thing again, right? After all, this is a dollar yen bottom here, right? Because we're on dollar yen 4-hour chart. And I couldn't help but notice on DailyFX website, I saw the dollar yen SSI, stands for Speculative Sentiment Index, and that tells you how many of their 150,000 clients are at FXCM.com are long or short a currency pair. And that's a lot of people, so that's a huge representation of the market. So when they get extremely stacked to one side, that means that they're trying to see a turn in the market. So since this has been heading down, they're trying to see a bottom in the market. The retail public's always bad about trying to see bottoms and trying to see tops, and they're almost always wrong. And matter of fact, they're probably always wrong. Sometimes say almost because I can't think of one time where they've ever been right. But just in case there's one, but I've never seen the retail public be right about a top or a bottom yet. Put it that way. So so we come down here again, and when these last few 4-hour candles are formed, the FXCM SSI indicator goes to 4 to 1 basically. It was 3.91 actually to 1. And what does that mean? That means that almost 4 traders are long for every 1 short out of those 150,000 clients. So that means that they're so confident that this is a bottom that 4 to 1 they're long, they're buying this pair. So for you got 4 long for every 1 short, another 4 long for every 1 short, etc. All throughout that client base. And so you've got everybody and their mama, it seems, long the dollar here. Now, they're confident that this position is going to go up. It's at that point when it gets to greater than 3 to 1 or 4 to 1, anywhere in that region, that I become very bearish on the pair. And I was seeing some forums and commented today. Somebody asked, was this another bottom in the dollar yen? And I said, likely not. And they said, why? And this was my statement. When everyone sees a bottom, it's not a bottom. You know, it's just like a top. When everybody sees a top, guess what? It's not a top. At NASDAQ 5000, I didn't hear anybody calling for a top. Everybody was thinking you're an idiot if you weren't a buyer, because that market had gone from 2,000 to 3,000 to 4,000 to 5,000 in a relatively short span of time. So therefore, it's only logical that it go from 5,000 to 6,000 as well. Well, as you can tell, we're not back to those levels even today on the stock market in the Nasdaq. So things don't have to come back. They don't have to bottom when you think they do. They don't have to top when you think they do, nor necessarily when I think they do either. But the point being is, when it looks obvious, it's usually not. When everybody's thinking there's a bottom or a top and it gets one-sided, and I use that indicator that is on dailyfx.com, that research site, just as an indicator to see the sentiment out there. Are traders extremely bullish or extremely bearish? Because chances are that the masses are normally wrong. And so if the masses are so stacked and so convinced that dollar yen is going up, I was almost highly convinced that it would be heading lower. So I was looking for a break of the support here, and took it short on down, for like 100 pips or so. And so, it's just one of those things. When you see things and it looks like all the planets have aligned, that's one indicator that you can use to tell if something's going to usually hold or usually break. Because when the masses tip to one side, they're usually wrong. So this is another reason why I don't encourage people to try to call tops or call bottoms, because if you go on forum boards and you see everybody calling for a top, guess what? It's probably not the top. You'd probably be better to just stick with the trend and let it blow through that resistance and let it keep on going. When the market's coming down and everybody's saying it's a bottom, it's a bottom, it's a bottom, it's a bottom, guess what? It's probably not a bottom, and you would probably just be better off sticking with that short. Let it blow through the support. Of course, you can move your stops up along the way and things of that sort to protect yourself, obviously. But trends continue on for a reason, and that reason is because a trend would not be called a trend if it only lasted for a very short amount of time. Guess what? Trends continue on, and they push past supports right and left all day long in downtrends. They push through resistances right and left all day long in uptrends. In other words, if we were to move this line up, we had valid support right up in here, but it got broken right in here. You can move this down. We had valid support here, but it was eventually broken right in here, and so forth. So, I mean, you could say we had valid support here, and again, this is where it broke it just earlier today, and comes on down here. So, trends you got to consider and let it weigh more heavily in your mind the direction of the trend than the support or resistance. In other words, if it's in a downtrend, yeah, you may get temporary bounces off of supports, but ultimately in your mind see that support likely a high percentage probability of that trend continuing and that support being broken. And an uptrend, when there's resistances, let me see if I can pull this up here real quick. When there's resistances like here, yeah, sure, it's going to bump up against it some, but see in your mind this trend continue and it pushed through that and keep on going. Guess what? You're going to be right more times than you're wrong when you take that view. So take the trend direction as your first, the heaviest weighting in your mentality, in your mind, and horizontal support and resistance is a secondary. Now, a support in an uptrend is a whole lot more higher probability to hold than resistance in an uptrend. Resistance in a downtrend is a whole lot more likely to hold than a support in a downtrend, because the trend will blow through the supports more than it's likely to blow through the resistances in a downtrend. So those are things to keep in mind. Those are things that I constantly point out in our Currency Cross Trader service, and I believe it helps our subscribers a whole lot. Thanks so much for attending. Bye-bye.